All right, good afternoon. Welcome to the Mike and Joe Mortgage Update. Mortgage Update with Mike and Joe. What is it called? Mortgage Update with Mike and Joe.
Where's Mike?
Where's Mike? I have a very special guest next to me. And no, that's not Mike Pulver. It is Batman. For those that were listening to our last month's podcast, we had a challenge out there to the listeners to grow our subscriber base. And I do want to say that in 2 of the 3 instances, Batman, we did achieve it. Our goal was to get to 70 YouTube subscribers. We got to 71. Our goal was to get to 550 Instagram subscribers, and we got to 541. So we did miss that one slightly. And our goal was to get, we got 11 likes and 129 views on our September podcast episode. So we were good there. So we hit 2 out of 3, Batman. And that is why I have Batman, AKA Michael Pulver.
So Joe, Instagram, how do we get it up to 1,000?
That's the goal for the next one. Okay. So the next one, our goal is to get to 575 Instagram followers. The GRB Bank Instagram page has a lot of great tidbits. We share a lot of our products, our programs, our YouTube videos with special guests all show up on our Instagram page. So we would love to grow that up to 575 by the next podcast and continue our challenge. We want to get to 90 YouTube subscribers and 140 views on the podcast next month. And if we do, I may be joined by a turkey in the next episode.
Well, listen, let's press on. The Buffalo Bills.
The Buffalo Bills. So I was going to wear my hat today, but I didn't want to take the spotlight off you, Batman.
So the Bills, eked out a win. They eked out a win. I actually
a little help from the stripes.
Yeah, I actually fell asleep at halftime.
Yeah,
probably
a fighting crime.
Exactly. You're exact. I mean, I saw the Bat Cave called me, and there were some people that needed help. So I had to leave, and so I just went out there, and so
there's not a lot of daytime games left this season. I think there's only 2 more 1:00 games left. So you're gonna be torn.
Right.
And watching the games and fighting crime.
Right. So are you going to be my Robin in this podcast today, Joe? Okay.
I didn't have my outfit though.
Okay. Well, listen. Let's talk about the Bills.
So speaking of the Bat Cave, have you thought about listing that thing lately?
Listen to the Bat Cave?
Yeah, I heard the market's
hot. The market's hot right now. Again, not a lot of comps for the Bat Cave. It's for a very unique buyer.
Yeah. Well, we'll get to that. We'll get to the market in a minute.
Okay.
Yeah, let's talk Bills. So we got New England this week.
Yep.
Since the last time we spoke, our defense has been decimated by injuries. Josh is I don't know what's going on there.
Yeah.
It's not looking like Josh.
Yeah.
Our offense is slow, but we got a good matchup coming up against the New England Patriots.
Mm-hmm.
It's always good
to
see Bill Belichick struggling.
Right. Well, I think there's just 2 things there. Then I want to make a prediction.
Okay.
So I think this weekend, I think the Bills will have a convincing win as long as they just let Josh be Josh. Meaning if he's out of the pocket, let him run. Maybe he slides more, but I think as long as he doesn't have any interceptions, I think the Bills are going to do very, very well.
Could probably stay away from dropping his shoulder into a linebacker.
Exactly. But my prediction, I know that we made one last year, so they're 4-2.
Well, we're going week by week here.
Oh, we're going to week by week. Okay.
We got the Patriots, and we got the Bucks after that.
All right.
Then we'll be back for our next podcast with the turkey. So what do we think about the Bucks next week on Thursday night?
I think they're going to win both games.
Both games. All right.
Yeah, I do. I don't know that I think the Pats, they should win big. The Bucks, might be a little tighter, but I think they're going to get wins. Okay. So,
right. So we'll continue our predictions as we go. But I think 2 weeks right now is good, so we can get to what's important here, the housing market.
Okay.
The dark market is I think you referenced it earlier.
Exactly. All right. So are we going to talk about the market?
Let's talk about the market. So just looking at the listing data that we prepare. And again, we're looking at applications that have come into the bank, what the average list price is, what the average sale price is, and that percentage over list. This month, we've come down quite a bit. Actually, for September, we came down quite a bit. And it's kind of echoing what we're hearing from some of our real estate agent partners, but not echoing what's being seen in the press. So I'll get to the numbers in a second, but in August, Rochester was once again named the nation's hottest housing market. Second time we received this ranking this year, and it was ranked the top 5 in the past 30 months. What set us apart, again, the properties drew 2.8 number of the amount of views, 2.8 times the amount of views than the typical U.S. property does.
Mm-hmm.
And our average for sale inventory spent just over 2 weeks on the market in August, which is much less than the compared country. And then additionally, the median price of a home in Rochester, $250,000, it's about $185,000 less than the average across the country. So even though our prices have continued to climb, we're still well priced below the rest of the country, and that's part of what's driving this hottest housing market. When we look at the stats, so Monroe County by itself, on average, was 8.3% over list for the month of September. 14610 and 14609 remain hot, almost 30% over. What's interesting from September is that if we look at the surrounding counties, it was actually higher than Monroe County. It was 11.5% over.
Interesting. Is that the first time that's taken place this year?
The first time it's taken place.
Yeah.
So Monroe and surrounding counties were 9.45% over list, but the surrounding counties by themselves were 11.5% over list. And then when we look at the amount of homes that are going over list, 87% of the homes in September still went over list price.
Okay. Joe, what do we find for our friends down in Syracuse?
Down in Syracuse, so Syracuse was a flat market. It was 0.65% in Onondaga County and 0.58% in Onondaga and surrounding. So very flat, lowest it's been all year in Onondaga County. We were in the 2s and 3s to start the year, but this is the lowest it's been from an overlist perspective. It's the lowest we've been in a while in Monroe, but in January and February we were in the 5s. So again, what we're hearing is that homes are going past delayed negotiations. We're starting to see that a lot more. Less competition, particularly in that higher price range, because the next thing we'll talk about is mortgage rates and how lovely they are today. A little scary for the Halloween episode of the podcast. And so we're seeing, that less competition in that area, and still some activity in the lower areas as well. But definitely a lot different of a market than we were in a month ago.
Right.
And, typically this time of year, October tends to still be busy, and then once we hit November, we start to see a tail off. Feels a little bit like we started to see that tail off a little earlier.
Right.
However, we are seeing more listings on the market as well.
Correct.
So, maybe it's those people that are finally jumping to get their home listed to get it sold.
Right.
Maybe that jump in rates kind of finally spooked them into it. I don't know.
I think, Joe, one of the things that I took a look at this morning is what's encouraging for us here at GRB is that our actual purchase application pace that we're on track for this month is we're actually on track to maybe be about 5% higher this year than last year, which I think is, a testament to our team and what they're doing. We want to thank the realtors for being kind enough to refer us and because we know that it's a tighter market.
Yeah.
So we're continuing to hold our own, and I think that's impressive.
Yeah. And I think when you look at the interest rates, if we just take that $250,000 median price, last year at this time, so October 20th, 2022, rates were it was actually when we first touched 7, right? It was 6.94 was the average Freddie Mac 30-year fixed rate. Today, we touched 8, right? So today we're sitting at 8%. That difference in payment, in monthly payment, how much do you think it is?
So far, if we're doing a $250,000 mortgage, I'm going to say that's approximately $120, $130.
So it's $181.
Okay.
But when you think about that, that difference of 1%, if you were waiting to buy a house for rates to come down, and now rates have gone up, or you're still waiting for rates to come down, what happens if they go up another full percent, right? And that $181 a month in difference, your rent could go up that much while you're waiting.
Right.
If your lease is up or you're having to renew it or look at renewing it. So although it seems like it's still competitive and rates are high, now, still, again, a good time to get into the housing market. We're going to talk about some exciting news that we received this week to help buyers get into their first homes.
Yeah.
But that difference in payment isn't as grave as it may seem.
Right.
People see that they get that sticker shock from that 8% rate, but $181 a month difference in payment, could be the difference of you owning a home or continuing to rent.
Right.
Look at those benefits, talk to a loan officer about, and or a real estate agent about what those benefits are, renting versus buying, and how you could get into a house.
Well, just one last thing that the Batman is going to share. Then the Batman, I see that the Bat phone is ringing right now, and I need to make certain that someone needs help. And when someone needs my help, I have to go. So, but that being said, one of the things that you just shared, Joe, in regards to rates going up to 8, is that now is the time to get in, because one of the things that people need to keep in mind that if rates drop to 7 to 6 to 5, the buyer pool is going to continue to expand. More people are going to come in. That's actually going to put more upward pressure on homes. And the one thing that people need to keep in mind is that you can't renegotiate what you pay for a house. I mean, what you pay is what you pay. You can renegotiate your rate.
Right.
So in the event that rates do come back down, which again we don't know when that's going to take place. That's people do believe the next 2 to 3 years the rates will come back down, and then if you're able to lock in the price of that home, but then down the road refinance, now is still a great time to buy a house.
Absolutely.
And with that being said, the Batman's got to leave, and I thank you for your time. And we'll see you again soon.
Thanks, Batman.
All right, Joe. Well, Mike is back.
Welcome back, Mike.
Yep.
See Batman coming in?
I did see he was running. He obviously had to go save someone or do a good deed. So
we haven't had appraisal gap, so he must not be out there.
Exactly. Right. Exactly. So Joe, let's get back to every podcast we've had. We've obviously talked about the GRB power tools, and just to remind everybody, a power tool is intended to help a realtor list more or sell more homes. And we have a whole series of tools that are designed to help realtors become more successful. And we're super pumped to announce this power tool that will be here within the next few months, the Homebuyer Dream Program. So you want to share with everyone and just kind of remind everybody, Joe, what it is and why we're so excited about it.
Yeah, so the Homebuyer Dream Program is a grant through the Federal Home Loan Bank of New York.
Right.
And members of the Federal Home Loan Bank, who are typically banks, can get participate in this program. And in the past, it's been a $10,000 grant. It is forgivable over 5 years.
Mm-hmm.
So if the customer stays in the home for 5 years, there's no repayback. It's fully forgiven. And there are income limits that do apply to the program.
Right.
80% of the area median income. The household needs to be under that. And there's different levels if it's 1 and 2 person households versus 3+. The program typically launches in the month of March. We got some great news last week from the Federal Home Loan Bank that this year the program is set to launch in January, which will be a nice boost for those first-time home buyers looking to get into the housing market at the beginning of the year. And the next piece of information that they shared with us is they're increasing the amount of the grant from up to $10,000 to up to $20,000. Now, when we talk about the area median price that we were talking about earlier at $250,000, right? That's almost 10% of a down payment at $20,000.
That's huge. That's huge.
So that's huge. Very exciting. When the power tools we've talked about this year and recently, there's been a lot of focus on the Cash Plus program, the pre-approvals. And, unfortunately, what's happened this year with the competition in the market is a lot of these first-time home buyers that fall under those area median income limits have kind of been, muscled out of the market because it's been so competitive.
Right.
This gives them a chance to get into the market when it's a little slower, right? January is usually a slower time. And get under contract, get a home, take advantage of a grant, and be able to use the program and get their offers accepted. So
Right.
we're very excited for this change. We'll share some more details as they become available. We do have a training scheduled for the beginning of November with Federal Home Loan Bank, and from there we can continue to share some additional information and when the launch on our end is going to be, et cetera.
Yeah. I mean, knowing that this is out there, knowing what the time frame is, what would your suggestion be, Joe, to those realtors that might be working with buyers that might want to learn more or qualify for this program? What should they be doing? Should they be doing something now? Should they wait? What are your suggestions?
The earlier you're able to get a buyer to one of our loan officers, they can determine the qualifying.
Okay.
The loan officers can work with the buyer if they have to fix their credit in any
Okay.
way to qualify. And then from there, really you're going to want to start house hunting in December,
Mhm.
to get under contract for a late January closing.
Mhm.
It's launching right at the beginning of January. So if you get under contract in December, that borrower can still close by the end of January with the grant. And that's huge because you're getting a kind of a leg up. Because it is first come, first serve,
Mhm.
right? So unfortunately, there's a finite amount of money.
Mhm.
And, as a bank, an institution, we get awarded a certain allotment of funds from the Federal Home Loan Bank. Those are our funds to use, but it is first come, first serve. So as that
Right.
money goes, we can't help anybody else. We did get a little short shot in the arm this year with a reallotment from
Right,
them after September. So that's always a possibility, but getting in now, getting in early, very important.
Okay. Well, so before we move on to kind of what our kind of market response is to, rates going up and what we're trying to do, to finish out the year strong, to continue to help our realtors, is, by the time we have our next podcast, which will be probably right around Thanksgiving time, right?
Yep.
So we'll certainly have a lot more information to share regarding the Homebuyer Dream Program, and certainly we'll keep everybody that's listening in updated.
We do have a special today. We're going to talk about 2 power tools, not just one.
Okay, what's the other power tool, Joe?
So another exciting announcement that just came out, SONYMA, State of New York Mortgage Association, launched or relaunched. They had this program about 2 years ago. It's the SONYMA DPAL Plus. So a standard SONYMA DPAL, and what DPAL stands for is down payment assistance loan. On a standard SONYMA loan is 3% of the purchase price up to $15,000. So if you're buying a $200,000 home, you can get a 3% down payment assistance loan through SONYMA, $6,000. It's a 0% loan that's forgiven over 10 years. So you don't make a payment on that down payment. Again, similar to the Homebuyer Dream.
There's no payment.
No payment, and as long as you stay in the home for a certain period of time, SONYMA's 10 years, it's fully forgiven. You never pay a dime back of that money. The DPAL Plus is a similar program, except there's no 3% limit, right? So it's not based on 3% of your purchase price. It's a down payment assistance loan up to $30,000.
So how do you qualify for this $30,000?
So the program, again, similar to the Homebuyer Dream, is a first come, first serve. It is live today.
Okay,
And there are income limits that do apply.
sure.
And there are also some restrictions as far as loan to value. So you can, the DPAL or the Down Payment Assistance Plus can only be used to bring the home to an 80 LTV. So let's say you only need $20,000 to get down to an $80,000 loan to value, then you'd get a $20,000 grant. If that full $30,000 gets you down to 80 or above 80, you could get the full $30,000 and qualify for that. Again, very similar. There's 80% of the area median income for the limits. The other piece with the SONYMA loans is their rates are typically lower than where the conforming interest rates are. So today, if we're at 8%, the SONYMA, I believe, when I looked yesterday, this was yesterday's rate, was at 7.375 with the down payment assistance loan.
Okay.
So
a good more than 0.5% lower than the prevailing 30-year rate.
correct.
Okay.
Yeah. And so, not only is the grant there, but you get the lower rate. And again, it's geared towards those, or it's meant for first-time home buyers. And it's meant to be able to take advantage and help make the loan more affordable from a payment perspective and from an entry point, right? You think about $30,000, that covers your closing costs, that covers your down payment.
Right.
You have to have some of your own money in the bank, but you don't have to use it.
Right.
And the other, I've had some conversations with some loan officers as well. What if you wanted to, you had $20,000 to put down, but you wanted to remodel the kitchen on the home. You wanted to remodel a bathroom, or throw that money in a CD, right? Borrow it at 0% and throw it in a CD. CDs today are paying 5.25%. So you're able to make money while paying 0% on the other money, right? So definitely some different ways you can think about using that money and being able to get in the home. You can still put your own money down on top of the down payment assistance loan. If you said, you know what, I just want to put it all down, you could do that as well. But it's a great tool for the first-time home buyer that qualifies. This also does apply to the SONYMA Homes for Veterans as well. So if they are a discharged military veteran, they could qualify for that $30,000 even if they're not a first-time home buyer.
That's great. That's great. So exciting news.
Yeah, two great power tools for the first-time home buyer.
That's fantastic. So Joe, let's talk a little bit about what GRB is doing in regards to trying to, again, to provide resources, additional tools, loan programs, partnerships to really help the realtor, finish the year out strong, and also, get prepared and excited for 2024. Obviously, we had our sales meeting with our team yesterday. We announced, I think, a lot of the stuff that we just talked about right now. But why don't you kind of share some of the other things that are coming down the pike that we're actually working on?
Yeah. So, NeighborWorks, which is another down payment assistance program.
Right.
They actually asked us to become a correspondent partner with them to be able to offer their product, which they're changing things up a little bit. We are going down that path of being able to do that so we can offer that to them directly, to our clients directly through NeighborWorks, make it a little bit more of a streamlined program. And that is a down payment assistance loan up to $40,000. Difference there is there's a payment, right? So you got to qualify and you have to be able to, you pay it back. But as we talk about these different topics, right? If the SONYMA program, that to me, that money's going to go pretty quickly, right? It is $10 million that they've set aside for the program. It's about 333 households if everybody.
And that's the entire state.
That's the entire state.
Right.
But as that starts to run out, now we switch into Homebuyer Dream, right? And now we get that 30,000 goes to 20, but you could still qualify, still get that same program because the income limits are the same. That money runs out. There's the potential of NeighborWorks and using that loan to qualify. There's the potential of using the standard down payment assistance loan to qualify.
Because that 3% down payment assistance loan
is always there.
That's a year round.
Yeah. So, that's one program. The city of Rochester in the beginning of October, actually. So the city of Rochester has a $3,000 grant program. You buy a home in the city, you're under certain income limits, you can get $3,000 from the city as a grant that's forgivable over time. They actually announced that they've increased that to $6,000.
That's huge.
Very big, right? And again, it's been $3,000 for quite some time. So with the increase in home values, increase in home prices, bringing that up to $6,000, makes sense. And then there's the employer assisted housing initiative, which is part of that as well. With SONYMA and the 100% financing that we talked about, the Cash Plus mortgage, our pre-approvals that we do, right? And then there's our rate relief program, which is the buy now, refinance later, and GRB will cover some of those costs for you.
Right.
So all these tools that we're rolling out, we are starting to see gain some traction, especially in the market. Had a lot of great feedback about our Cash Plus programs. I think the pre-approval program is just as good as the Cash Plus in my mind. And it's for those buyers that aren't putting the full 10% earnest money deposit, but still a fully underwritten mortgage commitment in hand, just like a Cash Plus. So some great things in the works.
It's exciting.
And some more exciting things coming that I think we have coming down the pike that I think we're going to get a lot of excitement around.
Yeah. And kind of the last thing that we just wanted to chat about was, obviously there's a lot of myths out there, right? And I think, part of our job is to make certain that we separate fact from fiction. There's been a lot of myths regarding credit reports and people going through a name change or things along those lines. Joe, can you kind of give us some what is the myth?
Yep.
And how do we bust the myth?
So, I think maybe not so much of a myth, but we see this from time to time. Somebody just got married, and they have their marriage license and they apply for their mortgage under their married name. The change your name on your driver's license, change your name on your bank statement, right? Some of that stuff can be done without really having to go through the proper channels to have it reflect on your credit. So if you change your name, you have your marriage license, but you haven't changed your name with Social Security yet, sometimes that doesn't flow over to the credit bureaus yet. Or you've changed it with Social Security, but you haven't applied for new debt yet, so that alias hasn't shown up yet on your credit. So being able to just walk through and say, okay, let's talk about step by step. How are you changing your name? How are you going about doing that? Step one is get it changed with Social Security first. Once it's changed with Social Security, then you have the proof you need to take it to any financial institution, show that you have your Social Security card updated with the new name. You'll probably need your marriage license or whatever changed, whatever you use to change your name, whatever legal document that might be. And then taking the time to actually report it to the 3 credit bureaus as well, Experian, Equifax, and TransUnion, because they need that information so that when somebody goes to pull your credit under your new name, they're actually getting a hit because that's been changed with them already, right? So now you've changed it with Social Security, you've changed it with the credit bureaus. Now everything should flow through. And a lot of times what happens is we're scrambling at the last minute trying to get all this stuff done with our client because they didn't go through the proper channels to get there in the first place. So, really, I guess the myth would be that if I just change my name, I can just proceed and do what I need to. But, there are some steps that you need to follow to ensure that you're setting yourself up for success.
Right. That's great. So in closing, Joe, anything else you'd like to share with our listeners?
No,
okay.
I don't think so. I think we shared a lot.
Yeah, we went through. There's a lot of content today. We're really excited about the fall. Obviously we got some of our fall items here, and I think from in regards to GRB with our partners finishing the year strong. We talked about a lot of things and tools today. And what we're going to do in working with our phenomenal marketing team is we're going to ensure that we get all of this, not only this podcast out, but also providing the resources, the information, the flyers, so that the folks that are listening in on this podcast have all of the details so that they can use it effectively with their clients.
There may or may not be reels of our power tools on Instagram, but you know how you can find out?
How can I find out, Joe?
Follow us on Instagram.
Okay.
Right. Follow us on Instagram so you can get those reels of our power tools, quick, short videos. You can share with your clients. Again, looking to grow that number to 575 so I can be joined by a turkey on the next podcast. I like turkeys.
I like turkeys. I hope you can find someone that can.
I hope so.
Okay. There's got to be a turkey out there somewhere.
Right. And we're trying to get those YouTube subscribers up to 90. We're at 71 now. That's 19. It's not a lot.
That's not a lot.
You probably know 19 people.
I do.
That don't follow us on YouTube. So,
I do. So.
And again, 34 people on Instagram. We can make that happen.
Exactly. So, all right. Want to thank everybody for their time. This is Mike and Joe signing off. Have a great day.